Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive in there. We're going to look at a bunch of different information. I'll give you my opinions, and let's dive right in. If you want to follow me, it's at Funny_Finance. And if you want to join our community, finding-value.com is where I dive deeper into all of these topics to look for potential opportunities for investments in undervalued sectors and companies. We still have Mayday coupon code that is still active. So we're going to start with the Great Marty, and I know this guy is ultra bearish, and I look at both sides of the coin. I look at bullish information, and I look at the bears. He says semiconductors nailed it, down 17% since then. There's the bearish engulfing. We have two of them in a row. That is generally a bearish setup. What you originally get is a big forceful reversal move over a few day period. Then what you see to get back to the top, roughly speaking, is you'll see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So in the three candlestick move lower, it took 10 or 11 candlesticks up to get back up here. Then you see another large reversal candlestick. And what that means is that people are selling its distribution into the market. Then you see a waterfall decline follow. This is falling like a free fall speed. What that means is that you've got a lot of selling pressure. People are offloading shares and people are not purchasing them. That's why you see the red army showing up in all these candlestick charts. Now, is this the ultimate top? Don't know. That's what we're going to have to find out. Why would I think this is an ultimate top? Well, generally the markets go up and at tops they lower rates. So if the Federal Reserve does lower rates, generally they are reacting to weakness in the market, and a potential pullback is still possible. So the bigger pullback or a potential top in this is very much something that I am watching and looking for. Now, I'm not invested in the semiconductor index. It has nothing to do with my holdings. I watch it because that's where the money is going to come from, a lot of it, when it rotates and looks for other sectors, when it moves from growth to value. And I'll get to that later in some of these things down here. So this is another one from the Great Marty. The S&P 500, are we paying attention? This is a rising wedge. We have a throwover top. We call that a throwover top. It's a slingshot to the opposite direction. So you get a throwover top out of the top portion, and then you get strong selling pressure to the downside. This very well could be the case. We could get a retest and then a big move lower. Why would I have a bearish stance? I know others are bullish. It's because of the leading indicators. It is because of unemployment rate. It is because of where we are at with the yield curve and the uninversion of the yield curve. It's because the Federal Reserve has mentioned about lowering interest rates. All of that matters. And that's generally when a top could materialize. So this is where I would start to get more defensive. And it doesn't mean that the S&P 500 going down will necessarily crash commodities. Not what I'm saying. But what I'm saying is it could, for a while, yank us lower into slingshot cheetah patterns is what I'll call it. This one's a reverse slingshot. It slingshots it up and then spits it back down. Liz Ann Saunders says personal savings rate moved down to 3.4% in June, the lowest since December of 2022. So the thing I want, the takeaway here for personal savings rates. So generally the big boom phases, saving rates are low. So the boom phase, 05, 06, 07, 08, saving rates are low. And then when you go into a bust phase, the saving rates goes up. So savings rates in bust phases, they generally start to go up and then you get a problem. So problem here and then they go up, go up. And right now we had it go up during a period of time in 22, 23, and that was that slowdown that we experienced. Could have been a recession, depending on how you calculate it. And obviously they went back and they recalculated things and they're printing money like mad, so they can kind of paper over this stuff. Here we are coming back down in personal savings rate, which is generally a good thing. Seth Golden, it says it would be extremely rare if the market would have topped in July. It has only topped in July one time since 1980 and only three times since 1950. Quick reminder, I said the same thing during the minus 10% correction in 2023 and before the end of year rally. Now, that can be true, and looking in the rearview mirror doesn't necessarily mean that you driving forward can predict things when looking in the rearview mirror, but it is data. Now, there's another thing. If we have a whole bunch of inflation, we can crash upwards. If we are spending a ton of money, we can still lose purchasing power in those indexes and indices that we are following. You can still lose purchasing power in them while they go up under inflationary timeframes. So you have to be in the undervalued asset that's appreciating against those other assets. And we're going to take a look at some of the ratio charts further along of other people's charts. Here's NVIDIA insider trading alert. CEO Jensen Huang just sold 29 million worth of NVIDIA shares. He's now sold 424 million over the last 6 weeks. He is offloading shares very quickly, much like Bezos, Gates, Zuckerberg, and a bunch of other people in the tech community. So do you think that this could potentially be a top? It sure seems like it. If you were asking me, if all these insiders are dumping shares all at the same time, sounds a little bit suspicious. Coming on down, here's insider selling intensifies in NVIDIA. Look at all the selling here. No one buying, but everyone's selling. That seems kind of interesting, doesn't it? Lisa says the Bloomberg US Financial Conditions Index has weakened to the lowest level this year, which means it's loose, like it's actually easy financial conditions. So that is kind of surprising. Michael says buy real assets, folks. It's simple. So this is the US national debt on course to double in just 8 years. The US national debt and projection assuming 1 trillion increase every 100 days. So I know that we talk about the real estate cycle. The real estate cycle is under monetary expansion. That's monetary bank lending into the system. It is credit creation that increases the M2 money supply from the monetary side. Now, this here isn't monetary. This is fiscal spending. This is US national debt. What we are doing is we are transitioning from monetary lending, and in 2008, 2009, and somewhere in that range, we switched to fiscal spending. So now fiscal is driving it more than bank lending or the real estate cycle. And that is something that I didn't know before I started looking into this. I thought that a lot of these cycles were strictly real estate investment driven, and fiscal is really starting to push this. You have to go back to the 40s to see something like this and the amount of deficit spending that is occurring. So this here is fiscal spending, and this is what's driving the train now. Really is. And I got that from Lynn Alden. That's where I got it from. From the interactive charts section on our website, the M2 gold ratio, and you can see it starting to fall again. That is another thing about the conditions we are in. When gold outperforms the M2 money supply, what that means is that people are starting to favor gold because of the conditions that the herd is being subjected to. We saw those conditions go down where gold outperformed the M2 money supply in the 70s and all the way to 1980. Interest rates peaked in 1981 and declined during this time frame here. We had another outperformance section from about 2000 all the way down to 2011. That's where gold also outperformed. We had a little pause, and we are starting to outperform, where gold is outperforming the M2 money supply again. That is an extension of the conditions that we are in. So this data is signaling that we could see the that gold price outperform the M2 money supply. And that is telling us about the market conditions we are in. Copper, the world's top copper supplier, Codelco, posts an 8.4% drop in production. It's probably because we are hitting peak, perhaps, copper production from a lot of these mines. We could see a decline in copper production at some point from existing old mines. We need to bring new mines on. It's going to be incredibly expensive because the mines are smaller and you have to dump a bunch of money in for a lot less tons of copper. So your pricing goes up versus these huge mines with much higher ore grades and much larger total recoverable reserves. Michael, another one says, and the winner is natural gas. Production in natural gas rip higher, and then our exports, U.S. exports, continue to rip higher. So I am fully intending to play a long-term trend of natural gas production in the United States and us exporting that natural gas. Josh Young, it says the Bank of America. Small caps remain historically cheap versus large caps. And look at history. When did that occur? That occurred also in 98, 99, 2000. And you know what else was that during that time frame? Oh, that was the beginning of the commodity bull market. The commodity to stock ratio bottomed in 98, 99 and then peaked, just in 2008, right when this is peaking. And we are again at a bottom here, bottoming out much like 99, 2000. And guess what else occurred? We had a tech bubble. And what else do we think we have occurring here? A tech bubble. So what makes you think, or what data do I have to say that we're probably very similar to 2000, 2001? Well, this is one piece of that information, along with going all the way up, along with the M2 to gold ratio falling and falling here at the same exact moment, which will also be tied to lowering of interest rates, to the decline of the dollar, which is also going to be tied to the peaking of the S&P 500 and these semiconductors. It is all interconnected and is the same market condition, and all of these charts pointing to us being in the same situation as 2000, 2001 in a tech bubble. That is about to pop. The Great Marti, let's look at that. Dow Jones, 2008. I think he's got the wrong time, but okay. It has the same fractal. 08 versus 2024. Coincidence or incongruence? It's a process. 2008, it's the same fractal top as what we have in 2024. That is basically playing out right now. Very similar fractal. Now, is it going to be the same? Is the outcome going to be the same? I don't know. But it is eerily similar. B of A, Hartnett says, we are one bad payroll away from cracking monopolistic, oligopolistic dominance. And there was a big pullback in the Magnificent Seven market cap as a percent of GDP. This could very well decline in a sell-off. That's what we saw in 2022 to 2023, which very well could have been a recession already. And we'll see if we're topping here and have another pullback. Hedge fund positioning in energy is the lowest it's been in decades. We've got no one in energy right now. It's minus 100%, my lord. Brandon Balo, I'm bringing this up again. So imagine the returns in the international stocks if this rotation mean reverts to 1 plus or plus 1 standard deviation, just going back to the top here. What could cause that? Well, last time we had that, we had the internet bubble. Remember those charts that I just showed you about all these things that could potentially be topping? Very, very similar to 2000, 2001. Well, that was there, and then we came back down to about the bottom of 2008. I think this will come up, could come all the way back. It could come all the way back to the bottom here. It could come all the way back to the late 80s, which is possible. Because a lot of the times when you go to the upside, it'll go all the way, and it could go way down here to the lowest level that we'll ever see in anyone's life. Very well could be the case. Because the farther you get out of balance to the upside, the more it could come all the way back down here. What I think is occurring is that the dollar strength is forcing people into dollar assets. And if the dollar reverses, I think this is going to reverse very, very hard. I am taking positions, betting against this at some point. We could see the dollar go down. I'm looking at interest rates potentially going back and the dollar coming back and the potential rotation of this moving lower. The Kobayashi letter says, breaking, U.S. executives are dumping stocks at their fastest pace in the last 10 years. The percentage of publicly traded firms seeing net purchases from their officers and directors dropped to 15%. Put this in perspective, the 10-year average of this metric is 26%. After a historic run higher, corporate insiders are taking profits on their own stocks. Why are corporate insiders selling so much stock? And this is the lowest level in at least a decade. Why are they selling here, guys? Probably because they see what's coming. Brady says the link posted at the bottom shows the SPX is very overdue for a regular 4-year cycle decline, plus that it has a very clear bearish monthly reversal candlestick with only 4 days left for the month. This, while gold versus the SPX ratio chart below looks like it's ready to break out. So we're going to go right into it. Well, we can finish reading this. It says, this breakout will be yet another sign that massive moves are coming for precious metals. Stay the course as the secular bull market has resumed with gold's historical breakout 7 months ago. Everything looks fine big picture. Might get a decline and backtest for gold at some point though. But do not sweat these wiggles. It is going to be the ride of our lives. Gold versus the S&P 500 of a 45-year chart. Last time we had that turn and turned higher was 99, 2000, 2001. What did we just look at all that information? We have that same exact kind of topping pattern in the S&P 500, the NASDAQ, all of those stocks. And guess what? That occurred at the bottom of this ratio. Where are we at right now? The bottom of the ratio of a falling wedge ready to break to the upside and start that move higher. More than likely, what we're going to see is the S&P 500 top out and gold start to move higher. Gold's already broken to the upside. S&P 500 is going through the process of topping. Here, it's all unfolding right in front of our eyes. It's all unfolding right in front of our eyes. Coming down. Whoops, gotta go back. Joseph Brown says how a Fed cut could send rates soaring higher instead. It says if the Fed cuts, they signal an end to the inflation fight. They aren't fighting inflation. Who wants long-term bonds with a negative real yield? Nobody does. They sell off, sending long-term yields, that 30-year yield, higher. The yield curve uninverts, it should be uninverts, triggers a recession and restarts the QE print inflation tighten cycle. Higher for longer, says Joe. I like it. Ronnie Stoffele says, that's a hell of a chart. Commodities are the better 40 than bonds. He's talking about the 60-40 with commodities going all the way back to the 1940s. And the 60-40 with commodities have outperformed drastically the 60-40 with treasuries. So commodities are the better hold over treasuries. Art Berman, the energy sector accounts for 4% of the S&P 500 market capitalization in 2024. It was 9% in 2008, 7% in 2014, and 5% in 2017, the lowest holding during those timeframes. You can see all the different sectors here and how little energy is at this current time. So Grady, I just wanted to read this. Yes, the next monetary system will come from the East. Yes, the COMEX will run out, gold and silver. Yes, the United States dollar will lose reserve status. Yes, the U.S. debt ceiling will be raised the 80th time. Yes, the debt cycle will end in a depression. Yes, a larger war is coming, pushed by the West. Yes, you need to prepare in detail for what's coming. And yes, the PM precious metals manipulation will end. So know as I see it, do not spend precious time on posts, articles, interviews that only exploits and repeats the given. Consuming the same info over and over again does not add value. Focus on preparing, action, and price instead. I like it. Peter Lynch, when stocks are attractive, you buy them. Sure, they can go lower. I've bought stocks at $12 that went to 2, but they then eventually went to 30 bucks. This is Michael Oliver. He says, suspect we get a rate cut next Wednesday, just 25 basis points. Either that or strong language to the effect of you'll 100% get it in September. Everything will ramp. And no, we don't think the stock market is going to crash here. That might come later in the year, but stocks aren't at those levels yet, in his opinion. So that is his opinion. We've got all these different opinions, and that's where I'm going to end it, guys, because that's what I've got for data. So give me a thumb up for the content, subscribe to the channel, subscribe to the website if you're interested. We do have a Sunday question and answer session coming up at 5 p.m. You can answer or ask me questions directly during that question and answer session, and we'll see you there. See you guys.